What if you could peek behind the curtain of the companies literally moving the money in our digital world? Companies, you interact with almost every day, maybe without even realizing it.
Yeah,
Today, we're doing just that. We're diving deep into a financial report that, well, at first glance, might seem like just a dense stack of numbers.
right. Lots of jargon.
Exactly. But it actually reveals some really fascinating insights into the future of how we pay and bank.
That's right. And our mission for you, the curious learner, is to quickly grasp the essential insights from Fiserv's latest earnings call, their detailed SEC filing, and the official press release.
Okay.
We're going to pull out the key strategic moves, maybe some surprising growth areas, and yeah, the challenges they're navigating, all without getting bogged down in the minutia.
Yeah, cutting through the noise.
Exactly. Get ready for maybe some aha moments about the underlying forces shaping commerce and banking today.
Okay, let's unpack this then. So who exactly is Fiserv? I mean, for those who might not be familiar.
Well, fundamentally, they're a leading global provider of payments and financial services tech solutions.
Okay.
Think of them as like the silent powerhouse behind a lot of the transactions you make every day. Swiping your card, banking online,
Right. The plumbing.
pretty much. Their stated mission is to deliver superior value, for stakeholders through leading tech, innovation, excellence, all that good stuff.
And looking at their Q2 2025 performance, it seems like they're delivering, despite what they called an uncertain macroeconomic environment.
Absolutely.
Yeah.
They reported a truly robust second quarter. Total JAP revenue, which is, their overall revenue.
Yeah.
It increased 8% to $5.52 billion.
Yeah.
But here's the really key thing. Organic revenue, so growth from their core business, not just acquisition.
Right. The real engine.
That also grew a strong 8%. And for the first 6 months of 2025, total revenue was up 7% to $10.65 billion, still maintaining that impressive 8% organic growth rate.
Okay, that 8% organic growth, that's a powerful signal, isn't it? It tells us that even with that uncertain environment, businesses are actively choosing Pfizer's solutions.
Especially their digital stuff, yeah.
Yeah.
It shows a real fundamental shift in how companies are managing their finances.
Right. So beyond just the top line revenue, how did Pfizer perform on the bottom line, specifically earnings per share, EPS?
Yeah, good question. Adjusted EPS climbed a significant 16% to $2.47 in Q2.
16%. Wow.
And their standard GAAP EPS increased 22% to $1.86. Year to date, adjusted EPS was up 15% to $4.61, and GAAP EPS up 22% to $3.36. So, consistent, strong growth.
Yeah, really solid numbers.
It demonstrates they're not just growing revenue, but they're actually efficiently turning it into profit.
And profitability, that's often where the real story lies, right? How did their margins look? What's driving any shifts there?
They did very well there, too. Adjusted operating margin expanded by an impressive 120 basis points to 39.6% in Q2.
Okay, 120 basis points. Remind us quickly what that means in simple terms.
Sure. So 100 basis points is basically 1%. So this means for every dollar they earn, they're now keeping an extra 1.2 cents in profit after covering operating costs.
Got it. That's a clear sign of them getting more efficient.
Exactly. It indicates strong operational efficiency and, well, pricing power, too.
Okay. And when we talk about cash flow and shareholder returns,
Yeah.
what's the big picture there? Are they generating enough cash to, reinvest and reward shareholders?
Oh, they certainly are. Fiserv generated $1.2 billion in free cash flow just for the quarter,
Wow.
which brings their total for the first half of 2025 to $1.54 billion. And what's more, they returned a substantial $2.2 billion to shareholders in Q2, mostly by repurchasing 12.2 million shares.
Buying back their stock.
Exactly, which effectively reduces the number of shares out there, making each remaining share, theoretically more valuable. For the first 6 months, that total return was $4.4 billion.
Huge amount.
And they've even increased their share repurchase guidance for 2025 now to approximately 130% of free cash flow.
130%. More than they generate.
Yeah, it shows real confidence, indicating continued active buying while, importantly, staying within their targeted leverage range. Think of that leverage range like their financial comfort zone,
Okay.
a measure of debt versus earnings, ensuring they stay stable even while investing heavily.
Right. So that's a lot of capital flowing back to shareholders, a clear sign of financial health. But I see they refined their 2025 outlook a bit.
They did.
How concerned should we be about that refined guidance? Are these just like temporary hurdles for Serve or maybe something deeper?
That's an excellent question. Their full-year organic revenue growth guidance was refined to approximately 10%,
Okay, 10%.
which is, yeah, at the low end of their original 10–12% range.
Yeah.
The reason they gave for this adjustment is, well, some new product launches and strategic initiatives are just taking a bit longer than planned to hit the market.
Timing.
Timing and, yeah, economic conditions have also been a factor. So it seems more about timing and market conditions than, fundamental issues with the business itself.
So it's about playing the long game with those strategic investments. Interestingly, though, while the revenue guidance shifted slightly, they actually raised the bottom end of their adjusted EPS guidance range. Now $10.15 to $10.30.
That's right, representing 15–17% growth.
So what's driving that upward revision on the earnings side then?
Well, that higher EPS guidance is largely offset, or rather boosted by the benefit of that increased share repurchase activity we just talked about.
Okay. Fewer shares, higher EPS per share. Makes sense.
Exactly. Fewer shares mean earnings get distributed among a smaller pool.
Got it. And what about the operating margin outlook? Did that shift as well?
It did slightly. Adjusted operating margin expansion guidance was modified to approximately 100 basis points, down from at least 125 basis points. This reflects the impact of 4 recently completed acquisitions, the refined revenue growth rate, and those ongoing investments in new product launches.
Okay. Again, sounds like investing for future scale.
I think that's the narrative, yes.
So these overall numbers really hint at a company, maybe, in transition, making big bets for the future. To truly understand where Fiserv is headed, we really need to peel back the layers, right? Look at what's driving their 2 core business segments.
Exactly.
Let's start by dissecting their Merchant Solutions segment. This is the part that helps businesses, process payments and manage their operations. This segment grew 10% in revenue in Q2, 9% organic growth. That's strong.
Very strong.
But their adjusted operating margin decreased by 200 basis points. What's going on there? What's driving that margin contraction?
Well, what's fascinating here is that the margin contraction was actually expected. It's part of a strategic move.
Oh, interesting. Okay.
It's a direct result of significant investments they're making.
Yeah.
I mean, think about it. They're pouring resources into marketing, sales, distribution to capture more market share.
Right. Spending money to make money later.
Precisely. There's also the impact of the CCV acquisition and, yeah, increased spending on new software and hardware. These are really strategic outlays designed to fuel future growth, especially for their star product, Clover.
Okay, so it's about investing now for potentially bigger returns later. And they have, 3 key growth initiatives within this merchant segment?
That's right.
Let's start with driving Clover growth. We hear a lot about Clover, their, all-in-one point-of-sale system that small businesses seem to love. How's it performing?
Clover is definitely a standout. Its payment volume grew 8% or an even stronger 11% if you exclude a temporary sort of gateway conversion thing where a major client moved processing.
Okay, 11% underlying.
Yeah. But here's where it gets really interesting. Clover revenue itself grew an impressive 30% in Q2.
30%? Wow.
Yeah. And this isn't just a big number. It signals that small businesses are increasingly demanding that kind of all-in-one platform for everything, payments to payroll.
Right, not just a card reader anymore.
Exactly. It's a clear indication that Fiserv isn't just selling a payment terminal. They're becoming kind of the central operating system for thousands and thousands of small businesses.
30% growth for Clover that's a significant leap. What are the core factors driving that acceleration, especially for a company the size of Fiserv?
Well, 3 main contributors, really. First, value-added services, or VAS. These are basically the extra features Clover offers beyond just payments. Think loyalty programs, payroll integration, maybe capital advances.
The add-ons.
The add-ons, exactly. Their penetration, meaning how many customers are actually adopting these, reached 24%,
Okay.
up from 20% a year ago. And they're targeting 25% by year-end. And total VAS revenue grew a massive 52%, driven by software sales, Clover Capital, and services down in Latin America.
22% on VAS. Okay. What else?
Second, hardware sales remain healthy, the actual devices. And finally, pricing and other services, including data, also contributed.
Okay, so a pretty comprehensive approach driving that Clover growth. What about its global footprint? Are they really expanding internationally?
They are. They're actively ramping up Clover merchants in all the new international geographies they added this year. They launched in Brazil back in April, and apparently it's tracking well.
Good start.
And they're expanding in Mexico, Australia, Singapore, and various European countries too, Belgium, Germany, the Netherlands, partly helped by that CCV acquisition we mentioned.
Right. And there was a major Canadian partnership announced, wasn't there? How significant is that?
Yes, a tremendously exciting agreement with TD Bank Canada. Fiserv will now be their merchant processing provider, and
Right.
they'll jointly serve new TD merchant clients using the Clover platform. And critically, Fiserv will also purchase a chunk of TD Bank's existing merchant processing business,
Oh, interesting. Taking over existing clients.
covering over 35,000 locations.
Yeah.
So this significantly strengthens Clover's distribution in what is already its largest international market. It's a huge win for them.
Yeah, that sounds like a big move. Beyond geography, how are they expanding Clover into new business verticals? Are they pushing beyond just, retail and restaurants?
This is a really significant strategic play. In May, they launched Clover Hospitality, aimed at the sort of upper-end restaurant market.
Okay, bigger restaurant.
Right, which effectively doubles Fiserv's total addressable market, their TAM, in that sector. But even more notable, maybe, is their partnership with Rectangle Health.
Rectangle Loaf.
Yeah, they're integrating something called Clover Practice Pay. It's a pay-compliant solution specifically for healthcare providers, launching early 2026.
Healthcare, wow, that's a different direction.
It is huge. It extends Clover way beyond its traditional base restaurants, retail, personal services into a massive and frankly evolving market like healthcare.
So they're not just growing in existing areas, but really carving out entirely new ones. What about horizontal software enhancements and integrating with other business tools?
Yeah, the ADP partnership launched last November. They called it Exemplary.
High praise.
ADP RN software is integrated into Clover, apparently generating leads for both companies, and they'll also sell Cashflow Central, another Fiserv product, by year-end through that channel.
Okay.
They've also expanded their partnership with Homebase, integrating things like employee scheduling, time tracking, team communication directly into Clover Essentials.
So really positioning Clover as that full small business operating platform.
That seems to be the goal, yeah.
This raises an important point, though. You mentioned Clover Capital as a key VAS driver. Fiserv provides capital loans, basically, to merchants through Clover. How big is that opportunity for them, lending to their clients?
It is a massive opportunity.
Sure.
And Fiserv openly acknowledges they are, quote, meaningfully underpenetrated compared to competitors like, say, Toast or Square in this area.
Okay, so room to grow.
A lot of room. They say they're taking a prudent approach to risk management, which makes sense, but they see significant potential to grow within their current risk appetite and maybe expand that over time.
Yeah.
They were actively refining their operational stuff, pricing, risk management decisions to really unlock this untapped market. I mean, imagine a small shop needing quick cash for inventory.
Yeah.
Clover Capital aims to be that seamless, embedded solution right there in their system.
Fascinating potential there. Okay, let's move to the second key initiative in merchant solutions, scaling distribution channels. Fiserv always prides itself on its unmatched distribution. How are they strengthening those channels?
Well, they're expanding their direct sales force, which is already around 600 people focused on small and medium businesses, specifically to support things like that new Clover Hospitality launch.
Okay, more feet on the street.
Exactly. They also continue to grow their financial institution merchant referral partner program, added 49 new FIs in Q2 alone.
49 banks referring merchants to them.
Yep, brings the year-to-date total to 82.
Yeah.
So more banks are basically funneling merchants directly to Fiserv.
Any strategic acquisitions or new partnerships on this front, boosting distribution even further?
Yes. They agreed to acquire the remaining 49.9% of AIB Merchant Services, their joint venture in Ireland. Apparently very successful. It's expected to close in Q3.
Okay, taking full ownership.
And AIB will continue to work exclusively with Fiserv via a referral program. They've also expanded their relationship with Bank of Hawaii, transitioning their merchant portfolio over to Fiserv.
Right.
And Clover is now part of U.S. Foods Check Business Tools program,
Yeah.
which helps accelerate their restaurant strategy. Lots of different angles.
Definitely building out those networks. All right, third initiative for merchant solutions, Commerce Hub and enterprise growth. What's happening on the larger client side, serving the big corporations like UPS or Fanatics?
Yeah, they signed UPS in Q2, providing payment products via Commerce Hub for over 5 of 400 UPS store locations.
Oh, wow. Okay.
They also expanded their relationship with Fanatics Commerce to support their online retail operations. And a notable development is this multifaceted partnership with Adobe.
Adobe, how does that work?
Well, Fiserv is using Adobe's marketing automation tools for lead generation, and Fiserv is also now a gold partner supporting a new Commerce Hub plugin directly on the Adobe Commerce platform.
Ah, making it easier for big Adobe clients to use Fiserv payments.
Exactly. Easier integration for large businesses.
So Commerce Hub is clearly gaining traction. Is it truly a global platform yet, or still mostly US focused?
Well, Commerce Hub is live across North and South America through a single integration point now. And they say they're making progress toward integrating other international markets for, ultimately, a single global platform.
Oh, okay. Get there.
And their biller business, helping companies manage and collect payments, that's also performing well. Growing pipeline, recently signed Erie Indemnity Company.
Okay. That's a really comprehensive look at the merchant side. Clearly an aggressive push into new markets, new verticals, deeper integrations. But Fiserv's influence, it doesn't stop there, does it? What's happening on the other side of their business? Serving the very banks and financial institutions that, underpin our whole financial system, the financial solutions segment.
Right.
This segment saw revenue increase 7% in Q2, also 7% organic growth. And unlike merchant solutions, its adjusted operating margin impressively grew by 280 basis points.
Huge jump, up to 48.7%.
Almost 50% margin. What's driving that significant expansion?
Well, this expansion was primarily driven by an increase in high-margin sales, specifically license sales and data and analytics sales.
Selling software and insights.
Exactly, stuff that's inherently more profitable.
Yeah.
Alongside that, they implemented some effective expense management initiatives.
Yeah.
So it's a mix, really. Higher value sales and disciplined cost control.
Yeah, a perfect example of where the quality of revenue really comes into play. Okay, what are the three key initiatives for financial solutions? Let's start with issuing payments and banking leadership. Highlights there.
Yeah, they're seeing continued momentum in the issuing business that's helping banks manage credit and debit cards. New clients, data initiatives. Although active account growth itself is a bit more moderate, likely due to that macro uncertainty we talked about.
Makes sense.
Key partnerships here. Continue their long-standing relationship with Synchrony, including a new program to be the exclusive issuer of those one-pay credit cards at Walmart.
Oh, interesting. Walmart deal.
Yeah. America First Credit Union also selected Fiserv for issuer credit processing, tokenization, things like that. They've expanded their government business for card and digital payouts, too. And they even extended their contract with Jack Henry, another major financial tech provider.
So strengthening those core relationships, what about internationally? Any big wins on the global stage for this segment?
They extended their long-term relationship with DBS,
The big Singapore bank.
largest bank in Southeast Asia, yeah, to modernize their credit card technology stack. That's a big win. Shows trust in Fiserv's modernization capabilities globally.
Definitely. And what about their own platform modernization efforts? Are they investing in the next generation of banking tech?
Yeah, Optus, their platform, which serves 25 of the top 50 U.S. issuers, is undergoing a multi-year upgrade. First client set to go live this year.
Okay.
But maybe more significantly, their next-generation cloud-native global issuing platform called Vision Next is expected to launch in Q4.
Vision Next.
Yeah, and it will integrate with Finxact, which is their core banking platform, and Payfair, a real-time payments engine. The idea is to provide a unified embedded finance solution.
Embedded finance.
Meaning banks can offer seamless financial services directly within other applications, kind of blurring the lines between banking and everyday life activities.
Right. Okay. Finxact sounds like a cornerstone of that strategy. What exactly does a cloud-native open API core platform like Finxact do for a bank or a fintech? In simple terms.
Okay, simplest terms. Finxact is like a modern, super flexible, lightning-fast digital brain for banks.
Okay, a new brain.
Yeah. Cloud native means it's built for the internet, so it's highly scalable. Open API means it's designed to easily connect with other apps and services.
Got it.
It lets banks and fintechs basically quickly create new products and offer banking services wherever customers want them. Maybe a new type of savings account or a tech company embedding banking features right into their app.
Right. And is it gaining traction?
Definitely seems to be. In Q2, they signed 3 significant contracts. One was a prominent sponsor bank that supports a bunch of well-known fintech companies. Another was a large healthcare finance company looking to offer banking services itself. Shows its versatility.
Yeah, interesting use cases. Okay, on to the second initiative for financial solutions, Cashflow Central and XD adoption. How are these progressing?
Cashflow Central seems to be a big success. That's the platform helping businesses manage their cash flow. They signed 23 new clients in Q2, bringing the total to 77 since launch,
Good momentum.
and nearly 500 more in the pipeline. Plus, U.S. Bank, Fiserv's largest client for this so far, went live on the platform in Q2.
Major validation there.
And here's something really interesting. Mailio, a key partner for Cashflow Central, was just acquired by Xero.
Xero, the accounting software company.
That's one very popular with small businesses.
Right.
Mailio is expected to operate autonomously, but with, strong alignment to deepen the Fiserv partnership, which could be really good for Cashflow Central's future reach, integrating tightly with accounting systems.
Yeah, that sounds like a smart strategic alignment. And XD, their experienced digital platform, how's that doing?
Well, they say demand for XD remains strong, but client implementations have actually been a bit slower than planned.
Oh, why is that?
They assure the quality is high, and they attribute the delay mostly to timing as they complete key enhancements and integrations. One notable Q2 enhancement was integrating merchant digital acquisition into XD,
Meaning?
helping banks find potential Clover leads directly through their own online banking platforms, connecting the dots.
Ah, cross-selling. Got it. Okay, finally, advancing cross-Fiserv solutions, bringing different parts of their business together. What's the standout here?
Oh, the standout is definitely the groundbreaking announcement they made in June about FIUSD.
FIUSD, what's that?
It's essentially a white-labeled stablecoin,
Okay.
integrated right into Fiserv's banking and payments infrastructure.
A stable coin, like a digital dollar.
Exactly. But white-labeled, meaning a financial institution can brand it as their own, but it's built on Fiserv's rails.
Wow.
It enables real-time 247 settlement and digital asset capabilities by combining assets across Finxact, Payfair, and Commerce Hub. They're working with big names on this: PayPal, MasterCard, Circle, Paxos.
Heavy hitters.
Yeah, they say early client interest is very encouraging, and they expect a pilot by the end of 2025. This really shows Fiserv's strategy to support all payment types and meet evolving needs, including, the cutting edge of digital assets.
That is a significant move into the future of digital assets, really positioning them at the forefront there. So, okay, let's zoom out. What does this all mean when we look at Pfizer's strategic insights, how they adapt to this changing world? How do these pieces fit into the broader payments landscape?
Well, if we connect this to the bigger picture, it's clear the global payments landscape is, it's rapidly evolving.
Right.
Advancing tech, the exclusion of digital payments, e-commerce, real-time payments.
Non-stop change.
Nonstop. And this also means competition is intensifying. Consumers, businesses, they're all demanding speed, convenience, choice, security, which is just driving modernization efforts across the entire industry.
And merchants specifically, what are they asking for from companies like Fiserv in this environment?
Merchants really want simpler, integrated, more flexible systems, tools to manage their operations, their cash flow, especially with mobile and e-commerce just blowing up.
Right. Less complexity.
Exactly. And this has led to the rise of more direct, digital-only channels for acquiring new, smaller merchants,
Yeah.
and more software providers, SaaS companies, integrating merchants, acquiring right into their offerings, which is a big opportunity for Fiserv's distribution, especially with Clover.
Right. And the financial institutions, the banks themselves, what are their core needs right now?
Well, banks are focused on winning and retaining customers, generating revenue, obviously complying with regulations, and enhancing operating efficiency. They're seeking tailored solutions and increasingly a single integrated view of customer activity.
Seeing everything in one place.
Yeah. And the shift to digital banking means there's just huge demand for products that facilitate seamless customer experiences across mobile, online, which is exactly where Fiserv's Finxact and VisionNext platforms are aimed.
So Fiserv is operating right at that critical intersection then, commerce and banking. How do they leverage that position and their, massive scale?
Their long-term strategy really focuses on deepening those client relationships through digital solutions, value-added services, and leveraging what they call their unmatched size and scale.
Right.
And Fiserv's business model creates what they like to call a virtuous Fiserv cycle.
A virtuous cycle.
Yeah. The idea is strong profits generate capital, which they then strategically reinvest back into the business, like we've discussed, or return to shareholders.
Fueling more growth.
Exactly.
Yeah.
Fueling even more double-digit growth. It's meant to be a continuous loop of reinvestment and growth.
Okay. Lastly, any impact from the macroeconomic environment we should be aware of? Beyond those refined outlooks we talked about earlier?
Yeah, well, macro conditions, things like fluctuations in exchange rates, currency devaluations, they can definitely impact their international operating results.
Right. Global company.
Exactly. For example, the Argentine peso saw a significant devaluation back in April 2025, which led to a $46 million foreign exchange loss for Fiserv just in Q2.
Ouch.
Yeah, they actively monitor these risks, use derivatives, hedging tools to manage them, but it just highlights the global nature of their business and the external factors they constantly have to navigate.
Absolutely. Well, this deep dive into Pfizer's Q2 2025 earnings, it really isn't just about financial performance, is it? It's truly a window into the evolving world of money.
Yeah, you really see the gears turning.
From innovative stablecoins to powerful POS systems, global payment networks, Fiserv is clearly building a future where financial transactions are faster, more integrated, maybe more accessible than ever. It really makes you think about how foundational these shifts are.
It's like getting a glimpse into the plumbing of our financial lives and seeing how it's constantly being upgraded piece by piece.
So, as you, our listener, reflect on Fiserv's moves and these broader industry trends we've discussed, here's a thought. How do you think these foundational shifts in payments and financial technology will ultimately change your everyday interactions with money? From how you shop to how you manage your own finances. Something to ponder.